Can everyone hear me okay? Hi, this is Manesh Patel. Thank you for taking the time to join today. As you guys been seeing for the last couple of weeks, we're getting ready to hold a workshop on AI for trading. But today we're going to show you a lot more on our AI forecasting product. Goal is to go for a couple of PowerPoints, explain how it works, and then go for some live charts. So our goal is 30 minutes, 20 minutes or so to go through PowerPoints, to go through, explain everything, and then the last 30 minutes to open it up and ask you guys to see what instruments you'd like to look at. We're pretty much open to any instruments in any time frame out there, and we could take everything that we applied and then use it on live charts. If you guys don't know me, you could find me on LinkedIn. You could see my profile. Basically, I started trading in 1996. I went down the engineering path, and then trading was my hobby. I did really well, carried the internet boom all the way up to 2000, then lost everything in the internet bubble crash along with margin calls. Luckily, I didn't give up, and then kept on trading to a point in 2007. I got offered to manage money, so I left the telecom industry after 16 years. To manage money due to my track record. 6 months later, I became the CTO for that firm. Helped to create machines that did 40,000 trades per second. 2010, I pretty much left corporate world from Wall Street and stuff like that. Pretty much been trading my own money since then. We've been educating retail traders how to become institutional traders for many, many years. Some people do become institutional traders, some people don't. It's not for everyone at all. And one of the reasons why is a lot of people have this conception that you could become rich overnight, just like a lottery. It's not that way at all. The other thing is a lot of people day trade one or two different products, and that's really not the way to trade this anymore. It was the correct way to trade 20 years ago. When you really didn't have online brokers and computers, but now this is a different world, a different trading world, especially with AI. As I mentioned, this is recorded, so this is our disclaimer to state this is for education use. We're not soliciting, buy or sell anything. If you do so, you're doing that at your own risk. All information is owned by EII Capital, cannot be copied or distributed without our permission. Okay. This is something we believe in, and this is something I really hold to heart. And the reason why is I have an engineering background, also a programming background. Those are the two things that pretty much made me lose everything during the internet boom. I complicated things, and I realized later that trading should be simple. And I believe in the KISS method now, which means keep it simple. That means you don't want to complicate things at all. Your goal is to have your system tell you when you get in and then manage the trade, and that's as simple as that. Your goal is to trade probabilities, not to gamble, but to trade probabilities. Okay? So I want to talk about AI first, because this is the latest buzzword that's been around for the last couple of months, couple of years, depending on when you're coming about. And AI is now starting to come into trading. People think it's a brand new word. It's not, believe it or not. AI is a buzzword. It's been around for many, many years. AI today is the same thing as automated trading from years ago. So the same thing as a robot trading for you, copy trading, any of those things, machine learning, high frequency trading, all of the buzzwords there have existed for many years, and all it is today is a marketing world that's being relabeled. So now they're calling it AI. The problem with automated trading and everything is that they tell you exactly when to enter and when to exit, and majority of the times a robot is trading for you. When you get into those type of scenarios, typically you get a 1-to-1 reward risk ratio, and it's very hard to do that. The other thing is it's not giving you forecasting. That means you have to be there when the signal comes and get in right away. If you're a couple of minutes late, a couple of seconds late, you could miss some of the reward, and at that point it's hard to get a good reward risk ratio. So it doesn't give you time to put the trade on, doesn't give you time to analyze anything at all. You have to instantly be trading. Uh, also, with AI trading, you're generating a lot of commissions. So a lot of brokers are promoting AI trading or copy trading or automated trading or high frequency trading, whatever word you want to call it. And their goal is that you're going to make money by putting on a whole bunch of trades. We do not believe that in the institutional world at all. This is more of a retail product, retail thinking philosophy out there, because the retail person thinks more about winning, whereas an institutional thinks about the risk. And we're going to talk more about that as we go forward. But your goal is to make the most of one contract compared to putting on a whole bunch of trades. And the biggest difference that you see in AI trading compared to what we're going to talk about today is that we're not looking to trade a couple of instruments. We're looking to follow the money. That means wherever the money is, whatever instrument's moving, that's where we're going to trade. I don't care what product I'm trading at all. The thing I like to do is always trade something that's moving, so I'm following the money. So I'm not day trading E-mini or gold or Bitcoin by themselves. If those products have a forecasting signal there, then I'm trading. If not, I'm going to be somewhere else. And give you an idea, the two biggest, hottest markets right now are not the US, it's not China. Can anyone guess what the two hottest markets in the world right now? These are the stock indexes. Anyone know? No? Or a majority of the money is flowing? It's not in currencies. A lot of people think it's gold. It's not. Believe it or not, Toronto and South Africa, if you look at those country indexes or the ETFs that are related to them, you'll see that those markets have been going up for the last couple of months, and they're up over 30%. That means you could buy anything there and you're going to be making money. So that's an example of following the money and trading where the money is, not looking at a couple of products and trying to make something that's not there, but try to make it happen. Okay. Typically, believe it or not, most AI products that are out there, they're going to give you a 1-to-1 reward risk ratio. They're talking about 15% gain, 10% gain, or so forth. We're not looking for that. We're looking at money management, 3-to-1 reward risk ratio. That means if I'm risking $1, I want to make at least 3. Okay. So our AI is different. We're not telling you to buy and sell signals right away. It means you have to be there. We're going to tell you that something's going to happen on the next bar. And what that means is if you're on a weekly time frame and you get an AI signal, that means the next week, the next bar, you have the possibility of a trade. If you're on a daily time frame, it tells you the next bar, which is the next day. If you're on a 5-minute time frame, that means the next 5 minutes if there's a trading opportunity. So you're going to get these signals ahead of time, and you have ample time to analyze the charts, prepare, and put the orders out there. We'll tell you exactly where the order should be, where your entry should be, where your conditional stop should be, and your target should be. And we'll also talk about money management, how to manage the trade, because that is the key in everything that we do. So our AI product is forecasting. It's not telling you to enter right now. That's a big, big difference, okay? And if you look here on the banner here below my name and the video, you could see here results. If you look at www.imtf/TNT Play, every week we've been publishing the results for the AI tool for the weekly time frame for US stocks, currencies, and futures. Every so often we'll do Indian market, we'll do crypto, and so forth. But we've been doing this since 2003, publishing our results week by week by week. And you could go to that link and you could see the videos that we posted every week since 2023. So you could see the results live and see exactly how it works. Okay. As I said, it allows you plenty of time to prepare. The other thing is that you're going to have a list of instruments to trade. That means you're not looking at everything at all. Your goal is not to look at junk. One of the things that we did in the institutional world, and this is before a lot of the computers were high end and stuff like that. So when I was managing money, one of the things we had to do is after a full day of trading, at night we go home around 4:30 or so. After that point, we have to look at all our instruments. So I literally scan the S&P 500 currencies and futures. Literally look at each of those charts. If your trading plan had 3 time frames you have to look at, you have to look at 3 time frames for every one of those instruments, which included 500 stocks for the S&P 500, 25 currency pairs, and about 10 future products. So every night you literally have to go through all those symbols and everything and look at your trading plan, find where the opportunities were, and create a list of everything to trade the next day. When the next day came, you take that list and you look for the opportunities there. That was a process that you had to do 5 days completely. It was a long and tedious process. And the problem comes down to is that you may know your trading plan, but the problem is that if you're looking at every instrument and there's a whole bunch of junk on the chart, sooner or later, you may know what you're looking for, but if you keep on looking at junk, your brain's gonna get corrupt, especially with time, and you're gonna get tired. So junk in, junk out is basically this philosophy there. Your goal is to have the list of instruments that are prime and ready to move, and without looking at charts, and that's what we're gonna show you today. So here's our cheat sheet here. If you guys be listening to any of the YouTube videos on a weekly basis, you'll see that we're about to go through the same thing I've been talking about over and over. On the chart, you're going to see this black bar. This is what we've invented. This is what we created. This is our AI forecasting tool. This black bar is called TNT. How did we come up with a name? It's basically the abbreviations of my kids' names. So TNT is basically my kids' names, abbreviations for them. So this black bar here tells you on the next bar something has a high probability to move. It could be 5 minute, it could be 10 minute, 3 minute, tick chart, daily, weekly. It does not matter. The TNT bar does not discriminate for any time frame or any instrument at all. So everything we're going to go through will work for any instrument and any time frame, and we'll go through tons of examples through the PowerPoint, and then we'll go through and open up the floor for any instrument that you want to see. But basically, you're going to get this TNT there. On the next bar, if you have a green background, that's telling you you're bullish. That means you're going to basically bet on it going up. Now the question is where? It's easy. All you have to do is, there's this blue dot here, which is a buffer above that black bar high. That is your buy entry. So that would be your buy stop order right there. Okay. Your conditional stop would be the red dot, and we give you a blue cross at the very top, which will give you the target. So we give you all the information you need, which is basically the entry, conditional stop, and your target there. Okay. So if you have a green background, you're gonna bet on it going up, and your order will be at the blue dot here. Conditional stop would be the red dot and target. If it's a bearish trade, we call it the background red. Okay, it's a light shade of red, not dark, because it's hard to see. So here, when you're betting on it going down a couple of points below that black bar here, which would be the blue dot, this would be your sell stop order there. Again, the red dot will be your conditional stop, and then you have your blue cross target at the bottom. So when you have a shade here, it's telling you it's bullish trending, and now you're looking to go bullish. If you have a red shade, it's telling you you're bearish and you're looking to go, it's bearish trending and you're looking to go down. If there's no shade, that means it's consolidating. And what you do is that it could break out a consolidation pattern, but what you need to do is you need price to hit the red dot first. As soon as it hits the red dot, then if it hits the blue dot on the top, you would enter bullish. If it hits the blue dot on the bottom, you'll enter bearish. So when you don't have a shade, which is consolidating, first thing you want to do is you want to see it hit the red dot, then the blue. Whenever it hits the blue after the red, that's when you're going to enter. If this bar had opened up, hit this blue first before hitting the red, you would never enter that trade at all. So this is how you enter consolidation patterns that are breaking out. Does anyone have any questions? No? Pretty simple? Yes? Okay. So, money management. This is something a lot of people don't talk about. They'll talk about the technical tools, they'll talk about entries and stuff like that, but they really don't go for money management. Money management has to be a foundation, and that's one of the things that we believe in, and this is one thing we go through. So this money management can be applied to the TNT. You could also apply it to your technical system today. So on entry bar, when you enter the trade, okay, you must be profitable at the end of that bar. If you're not profitable, you're going to exit the trade. Many people, believe it or not, when they enter a trade at the end of the bar, they're negative. And I don't understand why you would stay in a trade. If your technical system says it's time to go, time to enter, you should be able to enter. And then at the end of that bar, you should be profitable. If you're not profitable, you have a high probability to lose. But for some reason we stay in there because we get emotionally attached to that instrument. That's no longer the case. You should not do that. If you enter a trade at the end of that bar, you have to be profitable. If you're not profitable, exit the trade because it's not going to go your way, believe it or not. Okay? Once the first bar is profitable, the second bar you want it to be more profitable. If you're not more profitable on the second bar, that means it could reverse on you. We look for 2 bars to validate a trade, always 2, not 1, but 2. If you're profitable in each bar, then now you stay in a trade. For some reason, if the second bar closes and you're not profitable than the first one, then you exit the trade. If you pass the 2 bars, now what you're going to do is on the third one, when it opens up, you're going to go to break even. That means you're going to change your stop to the entry, and at that point you have no more risk. This is basic money management. Think about this. How many times have you been profitable in the trade and then you saw it to become a losing trade? A lot. That's the number one mistake retail traders make, is that they're profitable at one point in their trade, but believe it or not, they allow a winning trade to become a losing trade because they get emotional and they stay in that trade. Here, you're not going to do that at all. After the second bar, excuse me, you're going to go to break even. So if the market decides not to continue to trend, you're going to get out with break even, no risk, no loss, nothing at all. So you get no emotions. This is a huge, huge thing to do, which many people don't do, okay? Now your stop, once you're in a trade, whether it be break even, okay, at that point, if you get another black bar or an orange bar, you want to adjust your stop to the highs and lows of that black bar. So it's almost like a trailing stop, but it's not where you're trailing every bar and changing it. You're changing it only when you get a black bar or a reverse bar. Okay. Then, of course, we tell you on the chart, you're going to see these blue crosses. That's your target. The target typically is 3 to 1 reward risk ratio or higher. That means if you get to the target, you made 300% profit on the reward based on the risk that you have. Not 10 or 15 that a lot of people are looking for, but 300%. Okay. When you get to that target, we recommend that you at least take 50 to 75% of your positions off, if not all of them. If you do that, then you could start using a trailing stop. Okay, so this is the money management that we propose on the black bar. Does anyone have any questions in regards to the money management? No? Okay, let's go look at some charts. Okay, so here's a black bar. This is XBI. This is biotech ETF here. This is a 1 hour time frame. Remember, we don't care what instrument, we don't care what time frame, but I want to show you some examples here. These are all charts that we've posted. Here you have a black bar. It's a green background. That means you're going to bet on it going bullish. It's hard to see, but believe it or not, you have a blue dot right there. that is your entry. So the bar is going to open up, it's going to come down, then it's going to come and hit the blue dot here. You're going to enter, and that's your conditional stop is the red dot here, and your target is going to be here, the blue cross is there. First bar, we're profitable because it closed above our entry, so we stay in a trade. If it was not profitable, we'll exit up for minimum loss. Second bar, this bar closed here. We're more profitable from the first bar, so now we stay in a trade, and now we go to break even. So we had no more risk going into the third bar at all, okay? Our goal is to get to the target here. This gapped up here. As soon as it gapped up, our goal is to take 50 to 75% of positions off. We do that, and then you could use a trailing stop, which is pretty much this blue line here. A couple of points below the blue line would be your trailing stop here. So this is a trade that you're still actively involved in, okay? Bitcoin, I'm sure you guys have heard of Bitcoin here. There's a Bitcoin here. You could see this is when this was around 30,000 here. Here you have a black bar, green background, that means you're bullish, okay? Can you see my mouse? Okay, it seems like you guys are having a hard time seeing my mouse.
I can't see your mouse.
Okay. Da, 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 da. I don't know what it's doing. Okay, just look for the first bar after the black bar. Can everyone see that? Yes?
Yep, we can see now.
Yeah, I can see the mouse now.
Maybe it's delayed. Okay, so you have a TNT bar here. Next bar, you have a green background. It's telling you to go bullish. Again, you enter at the blue dot here. Conditional stop will be here. First bar is profitable. Second bar is more profitable, so you stay in a trade. Now you go to break even and you take this trade up. This one here, the blue cross targets were below you. So here you look for a 3-to-1, which you pretty much got right here. So you'll take off 50 to 75% of your positions, and then you trail. When you get this black bar here, you could use a stop below there, but the goal is that since you're trailing here, as soon as you get below the blue line, you would exit out, so you would take profits here. This is a 12-to-1 reward risk ratio, which is around 1,200%. Okay. This is Walmart here, same scenario here. This did not have a shade here, okay? So the TNT bar had a shade, but what really matters is the bar afterwards. This bar here opened up, hit the red dot. As soon as it hits the red dot, now I could go bullish or bearish. It doesn't matter, I have to play neutral. As soon as it hits the red dot, if it hits the blue dot at the top, I would enter bullish. If it hits the blue dot at the bottom, I would enter bearish. Here, it hit the blue dot at the top, so I entered bullish. At the end of this bar, it was profitable, so I stayed in the trade. Second bar here, this is more profitable. I stayed in the trade, go to break even, and now I'm taking this all the way up. And here, the blue line disappeared, so this bar here, I'll exit the trade. But you could see here, when it got to here, I was at 9-to-1 reward risk ratio, which is 900%, okay? So here, you probably would have sat there, take 50 to 75% of your positions off, and then use a trailing stop here, okay? There's different money management techniques that you can use, but this is just giving you one sample here. This is the E-mini here, okay? And you can see here, this was a black bar. Here, you green background, so you entered here, bullish, so real. So this is profitable, you stay in a trade. This is more profitable, you stay in a trade. It got to your target there, and this was a 3-to-1 reward risk ratio. Here's gold. I'm sure you guys have heard of gold. This is the latest chart for gold. A lot of you guys missed it, some didn't miss it. Now, here's not a black bar, but a yellow bar, okay? A yellow bar, so a lot of times here, right here, here's a black bar that breaks out on the next bar. Sometimes it does not break out on the next bar at all. So if it doesn't break out on the next bar, there's no trade there. Later on, it could break out, and that's what this yellow bar is. So you have a black bar in the past, and this is when it breaks out. So you're going to treat the yellow bar just like a black bar here, and what it is opens up here, enters here. It was profitable, you stay in a trade. Second bar is more profitable, you stay in a trade, go to break even, you got to your target there, and now you got a trailing stop. So this snapshot was taken, I think, a couple of hours ago here. So you could see that this is a live chart here, but you basically you entered here roughly around August 15 is when you would enter gold, and you would have been up over 1,000% reward risk ratio by now, and you could see you're in a trailing stop. Euro USD, this is a live chart. A lot of people are not thinking about this. A lot of people are looking at Euro USD from a short-term perspective. Euro USD this month had a black bar last month here, so it told us it had a high probability to go up this month. So we've been concentrating since the beginning of this month on Euro USD. It had a green background here, so we're looking to enter bullish. It entered here, our stop is the red dot right there, and our target's there. So this is a live trade right now, the monthly time frame. At the end of this month, this needs to be a profitable bar. If it is, we stay in the trade. If not, we're going to exit the trade. So this is a live chart right now that's telling you that this month you need to concentrate on the Euro USD. Out of all the 28 major pairs, this is the one that we're concentrating at the beginning of this month. Okay, and that's the beauty. We don't have to look at thousands of charts at all. We're able to trade any market out there, any instrument, because all we have to do is look for that black bar. And if your retirement account, you could look for that black bar on the monthly time frame, the quarterly time frame, and I'll show you some of those trades in a minute. And you could enter trades that could last anywhere from 1 to 5 years. Okay. A lot of people are looking at crypto right now. You hear about the buzzwords, Bitcoin, Ethereum. You hear some altcoins out there, Pump and all that. But believe it or not, the silent crypto coins are the major winners. This is one called Binance Coin, right? A lot of people have not noticed this at all. Beginning here, if you look here, here is June here. This is right here towards the end of June. You got a TNT. Then the next week, right here, it opened up with a green shade. We entered here, it was profitable. Second bar was more profitable. Now we're off to the races to the targets. We got to the target here. This is a close to a 10-to-1 reward risk ratio on a silent winner that most people haven't even heard of. Did you ever hear about the Binance coin going up? Anyone? No? Well, this is one thing we do is we look at a lot of the crypto coins, especially the altcoins, on the weekly time frame. When you get the weekly time frame on a lot of these altcoins, that's the time to enter. You don't have to think about they pump and dump stocks or pump and dump scenarios or anything like that. You don't get involved with the instruments at all. It doesn't matter what the instrument is at all. Just sit there and trade it based on what you see and manage that. We'll show you some altcoins out there like Pump. A lot of people have been talking about going up. We'll show you exactly where the entry on that was and everything going involved with it. But this is a silent winner here, which is, believe it or not, giving you a better percentage gain than Ethereum and the Bitcoin out there. Okay. Here's Pump USDT. You could see here, this is around September 10 on Wednesday, daily time frame. We got a black bar here, told us to set up. We entered here, it was profitable. Second bar was profitable. It got past the target, just kept on going up. And you could see here, this is a 20-to-1 reward risk ratio here at the top here. And you could see here, it's still going until this bar here where the blue line disappeared. So this allows you to get into a lot of the cryptos that you know nothing about, or really don't care to know about. Your goal is to get in, trade it, and get out. That's it. Believe it or not, half the instruments out there, I don't care to know anything about them, because the more you know about them, the more emotional you get. Your goal is to make money. That's it. Not get emotionally attached to anything out there. Andy says, own BNB for trading on Binance when you used to pay fees and got a discount. That's perfect. Okay. So here's the E-mini here. Believe it or not, this here is a live chart here. You guys heard the Fed announcement yesterday and everything going on. Believe it or not, you had a TNT bar here. This did not have a shade at all. So it opened up, hit the blue dot at the top. And I mean, that's not good. You can't go bullish because it has to hit the red dot first. It hit the blue dot, then it came down, hit the red dot. Now, it already hit the blue, so I can't go bullish. The only direction I could go is bearish. So it hit the blue dot here, and now it's basically, I entered the trade bearish, and this is a 10-minute time frame. So you enter the trade here bearish, this was profitable, stay in the trade, second bar, profitable, stay in the trade, now to go to break even. This is right around the Fed announcement here. You could see this was roughly around 2:30 Eastern Standard Time here after the Fed announcement. So you could use the TNT on the lower time frame to day trade any of the products out there. Okay, here's another 10-minute time frame. This was a currency, New Zealand CAD. You had a TNT here, doesn't matter what shade that's there. Over here, there was no shade at all. It opened here, then it went up, hit the red dot. Now I could trade it bullish if it hits that blue dot, or I could trade it bearish if it hits this blue dot. Remember, not discriminating on what direction because there's no shade. If it's green, I would go bullish. If it's red, I'll go bearish. If it's no color at all, that means it's consolidating and I'm trying to figure out which way it's going to break. So here it hit the blue dot here below, so I went bearish, profitable, stay in a trade, second bar, profitable, stay in the trade, go to break even. If you look here, 3-to-1 reward risk ratio before I went to break even. Okay, this is a 3-minute chart on the E-mini yesterday after the Fed announcement here. You could see here, this is a red background here, entered here. It was profitable, staying in the trade. Second bar here was more profitable than the first one. Stayed in the trade, went to break even, and the goal was to get the 3-to-1 reward risk ratio. And remember, this is a 3-minute chart. You could use this on tick charts or any time frame out there. Okay, this is one of the hottest markets I was telling you at the very beginning, which is the Toronto Stock Exchange here. This is where you got a TNT here. This is towards last year, end of last year here. Sorry, this was back in 2024. This is a quarterly chart. Here, it broke out here. It's a red background here, which is not good at all. Okay, so it actually tried to go bearish. You got stopped out for loss here, then went bullish. Believe it or not, in the workshop we're going to go for, you could re-enter here. You entered here, and then it took off to the races. Initially, this was a loss, and then if you stayed with it, you got that loss back, and you made profits on the way up. This is a quarterly, more towards your retirement account. I'm sure you guys have heard of Apple here. Apple here, this is beginning of 2024. You had a TNT over here. This is a quarterly chart here. So second quarter, we got a here, green background, enter the trade here, profitable, stay in a trade. This is more profitable, stay in a trade, got to the target. And then notice one thing, you're taking off majority of positions there, then you got this TNT. Your stop moved to here and boom, you're out. That was the end of Apple there, okay? This is silver. Not a lot of people notice that silver is going up with gold. We did. See, this is the example here. You have a TNT, it didn't break out after that at all, broke out later. So we're gonna wait for this yellow bar here, opened up, came down, got to entry here, profitable, we stay in a trade, second bar is more profitable, we go to break even, and now this is where we're at with this trade. Even if this comes back down, we're at break even. There's no more risk in this trade at all, okay? How many of you guys would love to know when the markets top out or bottom out. Find the highs and lows. Yes?
Yes.
Okay. Here's an example here. Typically you get a seasonal pattern where markets go down 2 times a year. One is February and March, and believe it or not, the second one is now, which is September and October. So this is February here. We have a TNT here, you had a green shade. It did not break and hit the blue dot there. When it didn't do that at all, now what happens is it's not going bullish, it's not going bearish. This TNT, if it doesn't break out afterwards, the high of that TNT becomes a major resistance level and the low becomes a major support level. Now what you have to do is you look at the range here and you wait for it to break below it. Over here, it broke below it here, so it told you the markets were going which way? Down. Do you guys see it? So remember, we always look for 2-bar confirmation. This is bearish, the second bar was bearish, so it told you that this market was going down. Here's an example here where it broke below the TNT here. This bar was bearish here, second bar never confirmed at all, so this never went down. Over here, you never broke the TNT low at all. So when you get a TNT on any of the market indexes or future products and anything out there, and it's on the weekly time frame, and you break the low, you've got a high probability that the markets can go down. Okay, you could see here that when we broke the low, the markets went for a big correction. Then over here, you can see a TNT, and over here, you broke the high, profitable, more profitable, break even, you got to the target, and this is where we stand right now. Until we get a TNT here, we will keep on going up. It's as simple as that. Okay? Here's Bitcoin right now. You can see here. Here's the beauty of Bitcoin on the weekly time frame. You had a TNT, you entered here, profitable, you stay in a trade, more profitable, stay in a trade, got to your target. Everyone good with that? Then it decides to come down, okay? Remember, the TNT highs and lows are major support resistance level. So we had an alert over here. Notice it got here and held. Then right here it was bearish, then over here it went bullish, and boom, now we're off. So Bitcoin now is holding this support level here, and this TNT high is the resistance level there. So it's ranging between this support and that level right now. So it's consolidating between those two levels. If you want, you trade it when you're at those levels, not in between. Everyone good with that? So I'm showing you a different aspect of TNTs, not when they're breaking out, but where you could use it as support resistance level to determine when there's highs and lows in the markets. So if you're a pattern trader like a double top or a triple top or anything like that, you could combine and use TNTs at those levels. If you're an Elliott wave trader, you could look for the TNTs to tell you when the wave 4 is ended or when the wave 5 is ended or any of that. As even the Fibonacci trader, you could use the TNTs at either 50% or 61.8%. And when you get a TNT, it tells you it's got a high probability at that point to end. So these TNTs, if they don't break out the next bar, they now become major support resistance levels. And if you've been trending for a long time, then you're looking for a TNT. One of the things that we do, and I love to do, is I love to take things that are 52-week highs and lows and then look for bottoms and tops. So things that are gone to 52-week lows, well, it's dangerous to go bearish anymore because it's already gone down huge. Now there's huge upside if it goes bullish. So all I do is on a weekly time frame, look for the TNTs on the 52-week lows to tell me when there's a bottom there. As soon as it breaks the high, I'm willing to go. If it's a stock, typically go in with a cheap option, 3 or 4 strikes out and a couple of months out. Okay. If it's at a 52-week high, I'm going to look for a TNT at the top and then look for it to break the low, and now tell me that the 52-week high now has high probability where it's going to go for profit taking, which then can turn into a trend reversal too. So that's a strategy that you could use with TNTs. Okay. UNH over here, you could see here, this was a TNT here, and the question was, this has been trending here, was it going to continue or not? It didn't break the low here, it broke the low here, never followed through. Broke the high here, never followed through, and then finally it just started taking off here. It held this TNT high, and eventually it took off here. So you could see UNH there, but here's the critical thing. You guys probably seen UNH tank. Well, when it's decided to take, if you take this TNT back here and you draw a line, look what it did. On a quarterly basis, when it tanked, it went straight to that level and held it, okay? And then look what happened. This quarter here came back, and at that point, you could take a risk with a low risk option trade here, and you could enter this trade and look how you're doing with UNH. So this is another example where the TNT highs and lows give you major support resistance levels, especially if you look at them on a monthly and quarterly level. So when the markets do tank, all you have to do is go to the monthly and the quarterly level, look for TNTs in the past for things that have trended, put alerts there, and you'll see that it's going to come there, hold it, and not your buying opportunity there. Okay? Any questions?
Those are good, thank you.
Okay, so let's go through, and now let's flip to live charts. So give me 1 second. You guys see my live chart? Yes?
Yes, now we do.
Okay. What instruments would you guys like to look at? Floor is open. Anything? No?
Receipts, maybe?
Okay, someone had Timas. What time frame? You gotta give me the time frame too, guys. Okay? So Sunil, what time frame do you want to look at? You guys could go on off mute and ask the questions live if you like. Okay, so here is T-Mobile, and you could see here you had a TNT here, it had a green shade here, you entered this trade here. This was profitable, so you stayed in this trade here. Over here, you came down and you hit the red dot, so you would exit out for a loss here. You okay with that? Yes? So now you're ranging, and the thing is that you're ranging between the two levels, which is here and here. You're okay with that? Okay? So now you're ranging between the, you can't see it, but there's these black dots. In our workshop, we're going to cover those. These are what we call the V closes, the volatility closes. So we don't pay attention in the black bar on the bar closes. We pay attention to the black bar, these black dots here. So the goal is to, once you break this resistance here, you're looking for that black dot to get it back above it. Here, you got back above it here, so it's telling you now it's going to be trying to go bullish. As long as that black dot remains above this line here, it could go bullish. So you could go bullish here, and then here, this TNT, it did not break out here at all, okay? And one of the things in the workshop we'll discuss is that both of these trades here, you really would not enter. And the reason why is you see this line above you, that's a resistance here. You want that line to be below you. And so these were not great trades at all, because when this line is above you, it's telling you the natural trend is bearish, and you don't want that at all. So this is a trade you would not enter there, and you would not enter here. So this is pretty much consolidating right now and really doing nothing. Does that make sense?
Yes.
Okay, Andy, you gotta, sorry? So no?
I just said thanks, Manish.
Yeah, and here you could see it's consolidating, but one of the things to take note is every time you get a TNT, you set a new range, okay? So over here, you have there, and then you have here. and you can see you gap down here, right? You gap below this level, but it's got a high probability it's going to come fill this gap. So you want it to come back and touch it here. So I would put an alert here at this TNT low right there and look for it to come back. If it comes back there and holds it, that could be the pullback to go down. And at that point, you could see it could come all the way down here. So you could look for a short trade from 248 all the way down to here. But it's got to hold this level here. But I would wait for it to come to that level there. Does that make sense? So the critical levels are going to be there and then also here. Questions? Okay, who's next? So Andy, if you wanted to look at BTC, USDT, what time frame?
Daily.
Daily? Okay, so quickly here, this is what I was mentioning before. It held this level right there, and now there's high probability it could get to this level here, and this would be the major resistance level, which is around 119,800. Okay, so it's consolidated between the two levels there, and here's the daily here, and you could see that you really didn't break out this TNT here at all. There's no color at all. This opened up, hit the red dot, entered here, and then came down. So this is, and again, that line's above you, so you don't want to really go bullish at all in this trade. Okay, so you wouldn't get an entry there. You had a chance to go bullish here completely with a lot of volatility. It didn't do that at all. So right now, it's just consolidating here. We're really doing nothing at all on the daily time frame. Does it make sense? So there's no active signals right now there. One of the things you'll learn if you're trading Bitcoin, 4 hours, believe it or not, is the best time frame to trade Bitcoin, because when it typically starts a trend, you're going to get it on a 4 hour and 1 hour first. And in fact, you've probably seen on social media, I talk about crypto trades Saturday morning. Typically when I wake up East Central Standard Time, I'm looking for TNTs on 1 hour and 4 hours across different cryptos trade, and then just entering them with a quick trade early in the morning, Saturday morning. Okay. What was the other one? Naka? Is it a crypto coin? Is this it? Andy, is this it?
It's the Kindly. It's a treasury company.
Okay, is it a stock or a crypto?
Stock.
Okay,
Stock.
so it's this one. Okay, so you could see here, you had a TNT here, this is the bearish movement here, and you can see the blue line. So this is still going down. And if you look where it could hold, if I enlarge this, there's a TNT low right there. Those are the two levels here. You held that first one right now, but these are the two levels there. Okay. And you said daily. On a daily, you really don't see much at all. 'Cause I don't think there's much volume in this since it's below $10. So I would probably stick to the weekly time frame where you could get better signals. Okay.
Thank you.
Ashok had NVIDIA. I knew NVIDIA will show up. So here's NVIDIA here. You can see NVIDIA is going up with volatility. Do you see any TNTs right now? No. So it's not really controlled by volatility on the weekly time frame at all. So if you look at daily here, you could see here, right now, the bottom here is this TNT right there. This is the range for NVIDIA, right there. And you could see here, it hit that one there, and then the other one here, which is the gap one right there, is right there. So this is the critical one right there, which is holding NVIDIA up. And then if you look on the top side here, you could see this TNT right there is right there. So there's your range right there, between there and there. That's your TNT right there. Ashok, you good with that? Yes?
Sorry, thank you. Trying to get up here.
Okay. Camilo had a VAX USDT. What time frame? 4 hours?
Yes, this one moved yesterday, 4 hour.
Okay, so here's one here. I have no clue what they do, don't care. So this one had no shade at all. So it had to open up, hit the red dot, it hit the red dot, then hit the blue. So you enter this trade, it's profitable, you stay in the trade. Over here, this has to be more profitable. It was. So now you gotta break even. Your goal is to get to the target, and it got to the target today on a 4 hour. Everyone good? And then I think there was a quarterly here. And this is quarterly. And over here, you could see here, there's no shade here. It opened up, hit the red dot, and then it entered here, profitable, more profitable here. And then over here, you got out of break even here with this TNT. You have a TNT this quarter, but it broke the high without hitting the red dot. So there's no trade this month for this one, for this quarter. So this is one I would not trade this quarter at all. Palantir daily. Here, you can see here you're ranging in this T now, and if you look at the daily time frame, you have a TNT here, but really not doing much here on the daily at all. It's just doing a lot of gapping. So let's clean it up by going to the weekly. And here on the weekly, you really don't see much either at all. Let's go to the monthly, and monthly is literally, that's what's controlling this now. So the time frame that's controlling is the monthly, it's not the daily, weekly. You'll see gaps there, but this is going up with a monthly time frame because you have a TNT, enter here, profitable, more profitable, break even. And now this will keep on going up as long as this blue line here holds. That means as long as you don't break the monthly low, Palantir could keep on going up. You're okay with that? Andy, you're good?
Yes, thank you.
Okay, and the target, the blue crosses are below you. So when they're below you, that means the higher time frame is controlling your target. So if you go to the quarterly, and there's not enough data to give you a target there. So I would trail with a monthly stop. But if you look at it any time frame lower, you're going to get all kinds of confusing signals. You good? Okay.
Yes, thank you.
Intel, of course, that was going to come up this week. So here's Intel here. You could see here, it had a TNT, had a chance to break out last week, did not do that at all. It hit the blue dot before it hit the red dot, so that was no entry there at all. It broke out a TNT here, but if you look here, you could see that this TNT high was the obstacle for Intel here. So this was a major resistance, which was at 25, which it couldn't break at all. Okay, and over here. Everyone good? And over here you have here Intel, and you could see here this was a green shade here. It didn't hit the red dot here. It didn't have to because it has a green shade here. So this was the entry at 26 and it's going up, but you have to be very, very careful. Reason why is Intel hitting a monthly resistance here, and this is one resistance right there, and the second one is here. Those are two major levels there. So even though it's gone up, the thing now is how will it close by the end of this month, and that's going to be a critical level. This daily, weekly. So over here, this started here, right there, and the weekly is still going up. It's they're kind of dying off now. And let's look at the daily here. You can see here you had a day TNT was profitable there, was not more profitable here at all, so you had to exit out the trade. So now you have to exit out. So I'll be very, very careful on this because it had a chance to follow through here, and at that point take you to the target. It didn't do that at all. So it's showing you signs of weakness now. So I'll be very, very careful with this one. Vlad, I can't do anything now because of with the Facebook link, unfortunately. But I'll post the recording. Thank you for letting me know. It's the first time I'm broadcasting live, so it's a learning experience. CLP monthly time frame here. This one's been going up for a while, and it's been going up from here, which is back in 2001 on the monthly time frame. It's still going. So the stop here is a monthly time frame trailing stop. Let's see the weekly. Weekly, you got another push here with that TNT here. You could see. So as long as now its support resistance levels on the weekly are these levels here. This bar is literally controlling it now. Do you see that?
Yes.
One more, guys, and then we're gonna wrap up. Any more? Okay, so let's wrap up now. Can you guys see my PowerPoint again? Yes?
Yes.
Okay.
Question.
So questions, I think we've pretty much gone for everything. How to get started. Here's how you get started. We have a workshop that's about to happen November 1st and 2nd. It's either going to be online, you have a choice of doing online through Zoom, or you could attend Dallas for 2 days. Pretty much it will be 2 days from 8 a.m. to 4 p.m. Eastern Standard Time. Paul, I will resend out the link. It should be working, but I'll send it out. Weekly session. So after the 2 days, we're going to meet every week for at least 1 to 2 hours for 7 to 9 weeks. It just depends on how long everyone needs help. But goal is in these weekly sessions is to review your trades, go for your winning trades and losing trades for everyone, and then also scan for new opportunities. So these workshops that we're going to have, we're going to be looking for opportunities the following week. So we'll have a list of opportunities for currency, stocks, crypto, everything, and you're going to be looking for those opportunities out there next week, the following week to trade. Okay, so that is our workshop there. The cost is $14.99. The cost of the indicator, if you don't attend the workshop, is $199.99. However, if you contact us at info@eicapital.com, mention code AI webinar, you can receive 20% discount or more on the class. So that's just something I encourage you guys to do if you're interested in it. Okay, is a 2-day workshop, or are you doing it on 2 days back to back? So the 2 days are going to be basically Saturday, Sunday. I'll be back to back. I'll be Zoom and also live here in Dallas. And then the weekly sessions, all of us will determine when to best have our weekly sessions, what day of the week and what time. And then we'll pretty much have those sessions going forward. Everything will be recorded because I understand, everyone does have family commitments and stuff like that too. But this pretty much will be the layout there. And then, you have access to me through Discord, and also a chat room will be made for the people attending the workshop. So pretty much I'm available a lot of times. A lot of people will tell you that I'm available 24/7. So I'll be answering questions and stuff like that live. Any questions? No? I think that's it, guys. Thank you for attending. Hope you guys enjoyed it. Hope to see you guys in the workshop coming up.
Thank you, Manish.
Thank you.
Recording stopped.